This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index currently trading at $46,319. Bitcoin is up about 2.2% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news events and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, institutional investors aren't batting a lash at increasing scrutiny of crypto markets by U.S. lawmakers and regulators. Our CoinDesk research team out with this chart showing institutional investors return to Bitcoin. In yellow, we see transfer volumes over $10 million. In blue, transfer volumes over $1 million. Larger investors, as represented by large value dollar transactions, fueled Bitcoin's nearly 20% price gain since last week, according to data firm Glassnode. A number of analysts saying the trend shows these institutions are focusing more on BTC's upside than on potential obstacles. Bitcoin's on-chain transaction volume with values of at least $1 million has risen over 10% since the beginning of August and accounts for nearly 70% of the total value transferred. Meanwhile, small-sized transactions have declined as a percentage of the overall market, as seen in red, green, gray, and black on that chart there. Transactions valued less than 1 million have dropped to around 30 to 40% of market dominance compared to 70% since July of 2020. And joining us now to discuss is CoinDesk Director of Data and Indexes, Galen Moore in Boston. Welcome to the show, Galen. So we're seeing big movements among folks with big wallets in crypto. So what does all this big moving of crypto mean?
Sure. I mean, I think it's fairly obvious that anyone moving $1 million or more of Bitcoin at a time is a fairly large investor, possibly an institution or organization of some kind, possibly a high net worth individual. I think there's some sort of grain of salt to be taken here. This is an entity adjusted metric, meaning they are trying to rule out transactions that's just a whale sort of moving funds from one wallet to another, and really focus on transactions that reflect buying and selling in the market. So that's somewhat of a heuristic, and you always have to sort of take with a grain of salt data like this. But I think what you can clearly see in the chart is a marked increase in the share of value transferred on Bitcoin, which is represented by the very largest of transactions here.
Do you have any idea if it's some holding, some selling potential? What are they doing?
Well, the coincidence with the run up of this past week, I think, is noted, right? It's not. I think you could look at this chart and draw a line directly from one to the other and say, look, this is a rally that's driven by institutional activity. Now, at the same time, we've also seen an increase in the number of addresses holding very small amounts of Bitcoin. So I do think there's certainly retail participation here as well. But everybody at this point trying to sort of read the tea leaves and divine whether this is a retail-driven rally or an institutional-driven rally. And I think certainly this chart points to the latter.
All right. We also have another chart, this one from Coinmetrics on Tether to ETH, indicating a shift of Tether activity from Asia trading hours to U.S. trading hours. Now, Tether underlies most of the trading activity in and out of Bitcoin as well and other cryptocurrencies. So how do you interpret this chart?
I think it reinforces an institutional narrative, Christine. This is a longer-term trend here. Trading activity moving away from China along with mining and investment. And the movement here, although the chart here doesn't show it, but the movement here actually began at the beginning of the year, long before the May crackdown out of Beijing. And what we're looking at here is trading activity in Tether. Shown by the trading hours during which Tether moves. So Tether is known as a stable coin used primarily by Asia investors. And the data presented here by Coinmetrics shows some change in that. We're looking at the hours when Tether issued on Ethereum is most frequently moved. And for most of 2020, the peak hour was between 7 and 8 a.m. UTC, which is the witching hour in New York. In 2021, at the beginning of the year, you started to see that peak hour move later and later to where it's now at about noon UTC, which more reflects a mix of U.S. and European trading hours. That's about 8 a.m. New York in summertime. And, I think what you're seeing here is evidence that, Tether activity is moving from Asia to Europe and the U.S. Now, look, Tether is only available on one exchange that's accessible to U.S. Retail investors. So it's probable that if this activity is driven by U.S. investment, it's primarily over the counter. And OTC desk clients are almost exclusively large investors and institutions. So, I think taken alongside the chart we were looking at a minute ago, it's certainly a sort of an indicator that points in the same direction.
Okay, interesting. So does this indicate that investors, high net wealth investors, institutional investors, do not really care about the regulatory discussions going on in the United States? It's not giving them a chilling effect at all into how they're positioning themselves into the crypto markets?
It is all anybody I am talking to is talking about. But that said, I think you had a guest on yesterday who made a pretty good point. We're talking about the U.S. government printing or borrowing $1 trillion. And at the same time, we're talking about Bitcoin. What better marketing or advertising for the orange coin could we possibly come up with here? I think, perhaps not only is the market, both retail and institutional, shrugging off the concern of a potential increase in regulation, but I think you also see maybe some sense of enthusiasm about the fact that Bitcoin is being discussed in the Senate in the context of an infrastructure bill.
All right. And so everyone is wondering, they're seeing a pop in the markets. Is it sustainable? Do we see higher highs from here, or will this just be temporary?
I think for people investing in the long term, at least for myself personally, there's a conviction that, Bitcoin has a lot of room left to run. And not only in terms of where the price number will be in a year or 2 years, but in terms of what uses and what role it'll have in global finance. So certainly, I think if you're looking in the long term, everything that's happened in the past weeks has a kind of a bullish flavor to it. Whether this rally is a sort of a dead cat bounce or the beginning of a change in the market remains to be seen.
All right, Galen, appreciate your insights. That was
Thanks, Galen
in Boston, CoinDesk Director of Data and Indexes. Coming up, America's fifth largest bank wants to offer clients crypto investments, plus navigating global regulations with payments network Mercurio.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
As the company that launched the world's first ever Bitcoin ETF, we at Purpose chose the CoinDesk Bitcoin Price Index, the XBX, to price our assets.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Looking at some of our top stories, Bitcoin remains in a long-term uptrend despite the sharp 50% correction from the all-time high of over 63,000 in April. Buyers were able to defend support at around $30,000 after a 2-month consolidation phase, which is resolving to the upside. Bitcoin faces resistance at 50 to 55,000, according to CoinDesk's Dominic Dantes, which could stall the recovery given short-term overbought signals. Meanwhile, U.S. Securities and Exchange Commission Chair Gary Gensler telling U.S. Senator Elizabeth Warren that Congress should grant the agency additional oversight and enforcement capacities, citing investor protection concerns. Gensler's letter to the Massachusetts senator was made public Wednesday, wherein he pointed to crypto trading, lending, and DeFi as his legislative priority. And finally, PNC, the fifth largest commercial bank in the United States by assets, plans to offer crypto investment services to clients. The bank is partnering with crypto exchange Coinbase, as well as Tesla CEO Elon Musk, to complete the project. Crypto, of course, is global, and working at the details of how regulations work in different countries is part of my next guest's specialty. Joining us is Adam Berker, Senior Legal Counsel at global payment network Mercurio. Welcome, Adam. So maybe explain a bit about what you do at Mercurio, and with that in mind, your thoughts on crypto regulatory discussions happening in the United States right now.
Sure. So I'm a senior legal counsel at Mercurio. I provide full legal support for our group of companies with entities all over the world, and I also conduct AML, KYC, KYB checks for our company and onboarding procedures in financial institutions. If we talk about the news from the United States, we should say we definitely see that they're strengthening their regulation, which is both good and bad for the industry. On the one hand, as we know, and as almost all the companies from the crypto industry state, crypto regulation gives companies certain rules that they need to know, and after states give these rules to the companies, they will know how to act in this or that situations. But on the other hand, we see these threatened rules in the United States, and this letter from Gary Gensler to the Senator Elizabeth Warren states that the United States will definitely strengthen the AML regulation for all the crypto companies, and that will make the US less attractive market for the whole world, for the companies from the whole world. And of course, a lot of companies that wanted to expand their activity to the United States will change their mind. So what we may also say, also we know that there was a bill, bipartisan bill, that was approved in the Senate and sent to the House of Representatives without certain amendments.
So what is your reaction to these crypto regulation? Well, with U.S. regulators and lawmakers weighing in and trying to find regulatory clarity in the crypto space. I mean, some people on one end think that this is actually a great idea because it will provide the pathways to building products in the crypto space. But I understand that you are working with different jurisdictions, building payments networks into different countries, Canada, Latin America, and such. And so where would you see as how would you see U.S. regulatory clarity coming and developing versus how you are developing into other countries, and where is the best jurisdiction so far that is really crypto friendly for companies that want to build in the industry?
Of course. So as we may see, the US regulation is very hard for a lot of businesses, as it not only involves obtaining federal federal registration for the companies, which is called Money Services Business Registration, but also money transmitter license or crypto license in every state where a crypto company wants to conduct its activity. And if we compare this regulation to other states, we may definitely say that, for example, Canada, if we talk about America, or Estonia or Lithuania, are far more attractive for the crypto companies regarding the regulation. And as the procedure of obtaining these licenses is rather cheap, and it's comparing to the US, it may be made far more faster. I should underline that the AML requirements for crypto companies in these countries are not as strong as in the US. For example, in Canada or in Lithuania, companies do not have the obligation to obtain certain documents like proof of addresses, utility bills of the customers. So it makes the onboarding process of the customers far more easier and faster.
Okay, so you just think that crypto companies will just leave the United States into more friendlier jurisdictions?
No, I don't think so, as the United States is a huge market for the industry. And of course, companies will try to fulfill this requirements. Nevertheless, it is a serious obstacle for medium companies, for companies from Europe, right, Asia, to expand their activity to the United States market.
All right. Adam, thanks for weighing in. I understand that you are busy building and trying to figure out this regulatory landscape across multiple jurisdictions, so appreciate your insights. That was Adam Berker, Senior Legal Counsel at Global Payment Network Mercurio. That's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first global look at the day's global crypto action. You're watching CoinDesk TV.